All right, hello traders. It is Thursday, May 2nd, 2024. A little colorful background and outfit today. So we want to get a little neon with you here as we go into another new all-time high day for our accounts. Markets getting some follow through from yesterday's big Powell announcement of nothingness that everybody thought was so great and shot the markets way up. And stop the skid temporarily now, but we'll see what happens. All right, let's just get into the markets. A couple things I just want to point out. When you're looking at different options to trade, I do go through technical analysis daily. Why do I do that? Is because A, it's for me primarily. I'm trying to see what trades are out there. What can I be doing in my account? And then I want to see, do I have the opportunity to trade? What do my accounts look like? So when you're putting all those things together, you got to have a plan. And my plan is not just having the strategies, but understanding what are the entry points for that. What's the entry plan? Why would you get into a certain trade? I have a lot of different strategies I can use, but why would I use certain ones when? Well, that's part of your plan. You got to have a trade plan, and you really should have rules for what are good setups. So let's get into what's a good setup, and let's look at a couple different things here. So let me go ahead and share my screen. Let's jump into the charts. I'll get off here. So you can see, let's take a quick look at what's going on out there. And we're going to do this quickly. So let's see, we've got a little timer. See if we can go through this in 10 minutes with you. How many charts can we hit in 10 minutes? Let's get rocking. All right, ES on the day. We're looking at the weekly chart on the left, daily chart on the right. One thing we notice is over here on the right, this is a bit of a bear flag pattern. We'll see. We almost broke through that today to the downside before finishing significantly higher. Right now, we're pretty much flat in after hours trading, but right now you're in a bearish trend on the daily. You're still in a nice overall bullish trend overall, okay, on the weekly. But you've got a nice pullback right to the 21 EMA and a bounce off of that. So overall, a little bearish here, okay, on a counter trend sell off here, and then bearish over here. But all the technicals are improving to the bottom. We'll see what happens if we, if we break below this line. Okay, that could spell some continued trouble for the markets. I don't know that we're out of the woods yet. Don't get all celebratory. Now, one of the things to bear in mind is what's going to happen in the after hours trading. Coin and Apple reported. Both looks like a beat, and both look like they're up, which should help the markets. But is Apple enough to really keep a little bit of this current rebound going? We'll see. So there's ES. What would you be trading in here? Well, right now, I think still this sets up really nicely for strangles. So we're close to the 21 EMA here. We've got RSI between the 40 and 60, dead on 50 over here on the daily. But the weekly is really what I care about most. Close to the 21, RSI, pretty much dead middle in here. Some decent volatility. So I think the strangles set up well here. 1-1-2 trades set up pretty decently on ES. That's what I would be looking at. And with this pullback here and potential bounce, I think is also a chance to get long with some naked puts potentially, depending on what you're looking for. All right, let's look at oil. Oil has been in a bit of a downtrend more recently here. So we'll keep an eye on this thing. Let's get out of this. All right, so oil, if we're looking at the weekly, uptrend back down to the 21 and 50 EMA. So again, a little bit of a bearish current trend here. Okay, but overall, we haven't really broken this uptrend line, which is still pretty much intact. It's getting close, but this is not like a major break at all here. And then you're in a bit of a bearish downtrend on the daily. All right, so overall, technicals are showing that we're going lower, but has this, now that we've broken the 21, the 50, the 200-day moving average, and a little bit of this uptrend line, are we overextended? Well, we're getting pretty doggone close to it. What would you trade in here? Well, on the weekly, a strangle doesn't look too bad in here. You're sitting right at the 21. RSI is right in the middle here. It's a bit bearish, which is fine, but in the context of an overall bullish uptrend, Okay, and then you're a bit bearish over here, but you're starting to get into oversold territories. I think I would hold off on a strangle just to see if we get any kind of a little bit of a bounce in here, but it's still not a bad spot for it. And I think 112 trades, looking at the weekly, still not a bad piece. And if you were bullish on oil before, you should be bullish on oil now. Inventories not great. You're heading into the summer months, a little bit of you got driving season coming up, so demand should start to increase as well. All right, let's get into bonds quickly here. Taking a look at bonds, you're still sitting in this volatility box down here. So the penalty box, well, you can just extend it out a little bit more. We've just been up and down for almost 3 weeks now. We've been just sitting in this tight range from about 113 to about 115. That's it. This 2-point range we've been in, but the technicals underlying are looking pretty positive. But on the weekly, you're still in a bearish downtrend. Okay, but how much farther down do we go? I don't know. We're at the bottom of the channel. Can that channel continue? Absolutely, it can. We'll extend it down here. We'll see, do we get any kind of a bounce in here and head to the top of the channel? I like bonds in here. I'm loaded on bonds. It's my second largest holding not by a ton, but it's second largest holding just behind ES. ES is now sitting for me about 27% of my account, oil at 22% of my account, and then bonds at 15% of my account. So bonds dropping off a little bit, but we do have trades on. We've got a strangle trade up 12%, another strangle trade up 2% in 28 days. We've got naked puts up 25%. We've got a 112 up 122%. So we're looking good on bonds. I think this is where I want to keep adding to bonds. So I think a 112 trade is set up decently in here. I also I'm not willing to do a new strangle yet. We're below my RSI threshold on that, so we need a little bit of a bounce back up here closer to the 21 before I put any new strangles on. And I just added naked puts recently. So really, if you look at my portfolio makeup, a 112 trade, I think is perfect for bonds in here if we can make one work. All right, so we've got, potentially strangle in 112 on ES. On oil, we've got, maybe a 112 trade in here, and probably more likelihood to put a 112 trade on bonds. And then if we take a look at gold, this nice pullback that we've been getting in gold, beautiful. Okay, this is exactly what you want to see. Okay, on something that just rallied so far beyond the 3 ATR, coming back in way over its 21 EMA on the weekly still. Gold still a bit overdone, coming down from overbought levels. Yeah, maybe some more downside to go on it, but you're starting now, and we'll start drawing this thing now. Okay, a little bit more of a volatility box on gold as we're moving sideways. Not exactly a bull flag or anything forming yet, but some consolidation. This looks like sideways movement and just huddling right around this 21 EMA on the daily. Not really down, back above, then above and a little down, and now who knows what tomorrow will bring. But we're just holding at 21 here, so it's pretty good as things just consolidate. What would you do on gold here? I think gold is not quite at strangle territory. I need to see it come down a little bit more. I want to see the weekly closer to the 21 and get underneath the 60 on RSI. But so I'm out there. 112s don't set up great here. So gold right now, if you can get a 112 to work, I think that's not bad. IVR is up there around 60, almost 58, 60. There we've got already some naked puts on gold. So there's really nothing I'm going to do on gold in here. And we've already got a 112 that's up 34% in 9 days. So if I could get something else on gold, I would. But right now, nothing great. Maybe a 112 if it sets up. Copper, an untradeable for me. So in this particular, it's breaking down from this channel to the upside. It broke the channel yesterday, or I'm sorry, today, pretty solidly to the downside. We're so far away from the 21 here that any kind of a pullback would be nicely. There's nothing to do. It's not strangle territory for me. It's way too overdone here. I want to see us pull back in here to get a strangle working. Would I do a 1-1-2 trade in here? Maybe. Would I like to see us get a little bit more of a pullback? I think trying to put on bullish trades when you're at these highs is a little bit nerve-wracking. So we don't want to do that exactly yet. So copper, nothing to do there. NASDAQ, not a whole lot different than the S&P. I think it's very strangleable in here. Not a, if that's a word, I want it. So put that in the Tom King dictionary along with the MD AU or the market down account up or the market up account up. Either way you want to look at it. Lots of different things, and right next to rut sucks. So any of those I think would work. Be smart in here. I think strangles on NASDAQ, not a bad play in here. I don't know if I want to do a 1-1-2 yet, but I think that's not a bad trade. So I think a 1-1-2 potentially, even though we got a kind of a bearish trend going on in the daily and a little bit on the weekly here in the context of just a pullback to the 21 on the weekly. That's a great place for us to keep moving. Let's see if things can improve. All right, RTY, the Russell. I like Russell in here as well. I think this is set up nicely for a strangle. I think it was set up nicely for a strangle yesterday. I think we're in good shape. We're right here at the 50 on the RSI on both the weekly and the daily, sitting right at the 21 EMAs. And we're just sideways trading in this. Not a bad strangle opportunity here. If you can get anything else to work, that'd be fine. But I'd be up for a strangle on RTY. All right. And then on the Aussie dollar, here as we take a look at this, you've been in a bearish trend inside of this range, bearish trend in the range, sitting right on the 21 EMA, dead on it with a 50 RSI, trying to recover a bit, but just sideways action on the weekly. This thing has just been tight for a while, just holding on to that 21 and riding it sideways. And look at all of the moving averages here on the daily, just all stacked right in the middle. You're getting a bit of a break, a move to the upside on it here. So we're getting away from things a tad. They're starting to run away a little bit to the upside. Let's see what happens on the Aussie dollar, but I do like things there. All right, let's get away from futures. I'm not going to touch base on most of the sectors, but all sectors except for healthcare were up today, and then also here on materials. So materials down on the day, but still don't look too bad. So a good day overall. Apple announced after the bell, it's been in a nice recovery mode here for a while, and right now it is up 10 points. So we're looking to open up about 183 tomorrow. So it's going to break this downtrend. If you're long Apple or got long Apple on this move to the 21 and above, that was probably the smart play. I think it'll drag some of these stocks higher with you. I think you could look. I don't think I'm doing anything with Apple. It's going to break out. It's going to be overbought tomorrow. And can it continue? Absolutely. But I would expect maybe a little bit of a pullback. It's got a gap that it'll have to fill. And then if we also look at coin, let's take a look if we can see where coin is. Okay. Coin had a fantastic day today. We have coin in the active trader service. So if you're into trading stocks, active traders, the service you want to be in. We closed a winner on Costco today. So we have a winner on Costco that's already filled. Coin should be a winner tomorrow. If we're looking at coin here, it's down $7 after hours on decent earnings. Let's take a quick look, see if we can find out what earnings were. Just destroyed. Earnings just destroyed. Fantastic earnings. I don't know why this thing's down a bit in after hours, but it's down like $6, so not really a whole lot of anything. That should give us a win in coin tomorrow, unless something tremendous happens overnight. I would expect the vol crush. We're sitting at 37% winner right now, so hopefully that vol crush gets us the rest of the way. And then we're also in Adobe. So we've got a play on Adobe. Where is Adobe? Here it is. So we've got a play on Adobe in here. Love this basing out that it's doing down here. You can see squeeze. Now we're now in a squeeze. RSI is rising. MACD is rising. We're getting close. Okay, right down here where I just highlight this little box down here. This is our put credit spread. We're at a 42% profit right now. If this thing moves any more sideways at all or slightly up, I like Adobe in here. So I think Adobe looks good. And then AMD after the earnings drop, trying to hang in there, but putting a little bit of pressure on some things. And then NVIDIA, just doing what it does and just hanging tight for you. So there's enough stocks. Let's get into our account. All right, briefly, let's just hit the account, see what we're looking at. We had another great day today. We finished with our delta down around 106, so 0.02. You can't get a whole lot flatter than that except for 0. So absolutely delta neutral. Markets can go up, down. It doesn't really matter. We are just in it for the theta decay, which is at 1175, 0.24%. Little light, but we're maxed out for the most part, so we can't really put any trades on. And volatility is low. I mean, VIX back down to 14 and change. VIX just giving up the ghost as always. All right, net lick today jumped again, 487, 746. That puts us at yet another new all-time high. So we just keep hitting new all-time highs in this account recently. BP usage stayed about the same. We're sitting at a nice 51% BP use. We're in lockdown. We can't trade. No new trades until this thing gets under the 50. But we did knock out another winner today. So while we can't trade anything that's going to chew up our buying power longer term, we can keep putting 0 DTE trades on, and that's what we did again today. In the active trader service, I didn't get the call out in time, but I did do a call credit spread today. So if we look at our closed trades, yesterday we booked $350 in profit. And then today, again, we did the exact same thing today, putting on a call spread. Yesterday was a put spread. Today was a call spread, 50% winner, 1.2% return on margin, and we'll book it. So we've got $700 just in 2 days on 0 DTE. It's just a nice thing to help offset some of the hedging or other things that we do and just generate a little cash flow while we're just waiting for things to open up. We are at 1420.23 realized P&L for the year. We're just into May by 2 days. And our net lick is now up to 1462. So we're up almost 15% for the year on our net lick in 4 months. So doing fantastic. We're not quite at 4%, and that's not our goal. We just happen to be hitting it. And we're doing it without stretching our margin in any one direction too far. We are now more than doubling the S&P's return on the year. So if you want to double your accounts, you want to do something to earn more than just the standard returns, and come and find out what we're doing and how we're trading. You can see how all the trades are paying off here. For the year right now, it is long-term 112s up about 19 grand. Strangles paying about 14 grand. Other 112 trades that we've got that are different setups, about another 19 grand there. The FB and BA trades are down for the year because we put these on for no credit, and we had a few of these. We just closed the naked puts out in last year, so we were just seeing the losses on the PDS here. And then 0 DTA, we're up $6,200. The 120-day naked puts were up $3,300. Hedges cost us money, which we know. And then bill just keeps paying out. We got another bill distribution that should be hitting the account here in about 6 days. So we'll have another nice bill distribution that's also helping pay. So between bill and 0 DTE, we're doing pretty well there. So overall, we've now generated $60,000 in this account in just 4 months. So $60,000 in 4 months on an account that we started the year at $400,000. So not too shabby, pretty good return, 14% on the year. And we're really not stressing. We're not day trading. We're not scalping. Okay? We're not having to do any of that kind of stuff. Okay, you can take as little time as you want. I'm spending approximately a half an hour to an hour trading a day at most, probably closer to the half an hour of actually paying attention and trading in my portfolio. So no new trades here. So really not spending any time except some zero DTE, put it on, see if it wins or loses. And that's about it. So not a whole lot going on in the account, but we're doing really well there. I wanted to also share the IRA account. So this IRA is technically at new all-time highs. It's now up to 248,467. Well, Tom, that's not a new all-time high because you were at 252,000 earlier in the year. Well, yes, for this account IRA that we're using, we were up that far, okay, at 252,626, but we did take a minimum required distribution. This is not my account. It's one I'm managing so that I can share it with our members and show them how to trade an IRA. So we've not only taken the distribution out, but we're almost back to the new all-time high, and we're over where we started for the year. So not only have we taken the money out, we've already made more money than we've taken out of this IRA. This IRA is now up 6.5% in 4 months. We're well on our way to an 18 to 20% return a year, and we're doing it the right way. Okay, so you can see that there's not a lot of trades going on. This is super easy to manage. Okay, super easy to manage, generating the cash, okay, generating the net lick that we need to. We've already paid off the minimum required distribution that was taken out of this account, and now it's just all about putting the gains back in and continuing to grow this account. So we're up nicely on the year so far. So I just wanted to share that with you. All right, if you like what you saw here, feel free to come and give me the like down below. So don't give me a thumbs down. Give me the likes down below. Give me the thumbs up. Let's get as many likes in here as possible. If you're feeling that I'm giving you some value, do me a favor. All I'm asking for you in return is to just like the channel. Okay, like the posts. Share these posts with anybody that you know that may get some great use out of it. If you're not a subscriber on YouTube, let's get that subscriber. We're close to 10,000 members. Right now, 10,000 subscribers on YouTube. We're just a little bit away. If you're not a subscriber, subscribe, get the alerts, see what we're doing. I got more stuff coming out on the Active Trader service. You're going to get some more stock picks coming out. You're going to get some new trades. I got a couple of new trades working. We're going to be sharing with you here. So if you like it and you feel you're getting value, give me the thumbs up, give me some likes here. And if you want to learn how to trade, create your own plan, okay, create your retirement, your wealth portfolio, come and join us. Okay, we're not going to be day trading and scalping and doing all kinds of crazy stuff. Okay, we're going to teach you how to grow your money steadily, create wealth without putting in hours and hours and hours of work a day. All right, we'll see you in the Discord for those of you that are members. If not, we'll see you back on YouTube tomorrow. Enjoy a great rest of your evening, everybody. Take care.